Great, we are live. Hello, everyone, and welcome to the first of our 2025 Marqeta API Chronicle live stream series. My name is Josh Mendelowitz, and I work in the marketing team here at Marqeta. If this is your first time joining us for one of these, then welcome. We've been running these API Chronicle live stream series for over 3 years now, and I love these sessions. They're a really great opportunity for us to dive a bit deeper into the world of payments and cards with expert panelists. They also leave room for engagement from the audience. So if you are watching with us on LinkedIn or YouTube, you can leave some questions in the comments or give us some reactions. It's great to always see everyone engaging with the content. And we have a truly great panel today. So great that when one of the panelists couldn't make it last week, we decided let's reschedule it rather than carry on without them, because we think we have a really great crew of experts across payments and trading and investing to talk about our topic today, which is trading transformed, how card programs are revolutionizing trading platforms. So with that, let's kick it off with some introductions to our panel. So when I say your name, just introduce yourself, tell us a little about you, your current role, and your experience to date. So let's start with Kalayan, the head of card issuing and payments at Trading 212.
Thank you, Josh. Thanks for having me. Absolute pleasure. It's my first time. So thanks for waiting me. I'm the reason for rescheduling. So really happy that we rescheduled this conversation. I'm currently leading the Trading 212 card program and the payments department for the last 2 years. And I think I spent already 12 years in the payments domain, doing other card issuing programs as well, acquiring business and payments in general. So yeah, been there for quite a while already.
Amazing. And anyone who missed it, we were very excited to announce our press release with Trading 212 a couple of months ago. I'm excited to help. Marqeta is helping you guys continue to grow across Europe, which we will get into. But first, let's go to Mattia, who is Senior Director at Visa for Strategic Verticals, specifically covering wealth, trading platforms, and all sorts of verticals, and has a really cool background and experience. So let's go to Mattia.
Thank you, Josh, for hosting and for inviting me. So I spent almost, like Kali, almost 12, 13 years in payments. I joined Visa 3 years ago. I had the opportunity to work a lot with in the crypto space. And now I spend the last, let's say, couple of years trying to help Visa think about what's going into the wealth space, a trading platform, asset manager, and how we can, partner with players like Marqeta and hopefully in the future also Trading 212 to succeed and scale into the space.
Awesome, thank you. And last but not least, let's go to our longtime friend of the live stream series, founder at Bitzel and also writer of the FinTech R&R newsletter, Jazz.
Brilliant. Thanks again, Josh. This is your first time as well, so I think we'll try and go easy on you if we can. So my name is Jazz Shah. I'm an independent FinTech product consultant. I've spent coming up 17 years working in financial services, specifically helping build products, and the past 7 or 8 have been specifically in FinTech, working on different types of products, including card programs during the process of standing up a couple of challenger banks, as well as embedding a card program as part of an SME lending proposition. So I've got a kind of very broad history and experience with payments from initially the corporate side and in the past 7 or 8 years in the FinTech sphere.
Amazing. Cool. So yeah, we've got a great panel and the right one to talk about our topic today. I did look at the registrations before, and we've got a nice mixed audience today, including some representatives from trading and investment platforms, as well as some of our usual suspects across the payments industry. So I thought before we jump straight into card programs, we will get to it. It's probably good to set some of the context of where we're at and talk about the rise of retail investing and trading itself. So for those who don't know, over the past several years, we've really seen a significant rise in retail investing, self-directed investing and trading, especially among younger generations who really take to the UX user-friendly platforms like Trading 212. They really lower the barriers of entry to trading and investing in really new, innovative ways. So really want to get into how innovative platforms like Trading212 are driving these trends, whether it's fractional investing or daily interest, commission-free trading, or just the educational content. So maybe let's start with you, Kalyan, and hear about, from your context at Trading212, how you're seeing this trend of retail investing over the past few years.
Yeah, absolutely. We see a number of trends, and as you mentioned, I'll start with access at scale. This is how I can call it, and this means lowering the capital barriers to our retail investors, allowing fractional shares, and this give the retail consumers the chance to have a slice of very expensive stocks like Tesla, Amazon, Nvidia, and this means just you have a couple of dollars, you can start investing and create the habit of building wealth, which is quite important. And I think the current young investors, they start earlier because they have now access to the world of finance. I see that also the easy portfolio diversification is a huge thing. For example, we are trying to offer the so-called pies, where our consumers can create their own ETFs, I may call this way. So they have the freedom, they have the flexibility, and the chance to create their own portfolios with a very, again, low capital requirements, and have this kind of lowering the risk and making their investments easier. I see another trend is the idle cash optimization, which is a huge thing, and all the daily interest products that currently drive this habit of building wealth. And it's a very easy and really transparent way to have and use the momentum to build and save money. These days, another trend is commission free, but this is now the baseline. It's something that retail investors expect. They expect the zero fees. They expect very transparent fee structure, very low and absolutely free. And of course, another very important thing that we are also very focused is blending the education and the community. These days, the access to information is huge. So you need to be very active when it comes to YouTube videos, educational materials, communities like Reddit. So we should be there, and we are there, and we help our consumers understand the products, be educated, and of course, as mentioned, we are all about building wealth. So this is what we want to create within our consumer base.
Amazing. That's great. Yeah, I think Trading212 do such a great job at the educational piece, which I know is really important. I know it's something, Jazz, that you definitely talk about. So maybe let's go to you, same question. What do you think is driving the rise, and how education plays a part in it too?
Not much to add, to be honest, to Kalyan's comments. He's pretty. He's covered a lot of trends, and most of them are, or all of them are spot on. And I guess it's probably interesting to think about how lots of the stuff that Kalyan's mentioned has now become the norm, whereas like 10 years ago, fractional investing was not a thing. Commission fee trading was definitely not a thing. I remember, I mean, I'm not going to mention the bank, but it's a bank I still bank with, that you'd have a flat fee of any trade. Any trade would be £15.95. That's it. Even through the online platform, and it was a internet banking investment platform, not a mobile digital first platform. Flat fee, whatever you trade. If it's one share or 1,000, you'd have a flat fee and then a percentage. So I think it's also important to highlight how far we've come, and especially with apps like Trading212 and others leading the charge on that front. I think the only one I'll overlap with is education again. I think it's there's an important really interesting stat from, I think, research done by Wealthfront, and they're saying, oh, sorry, not Wealthfront, Charles Schwab. They said 76% of Gen Z investors want more educational resources before they make an investment decision. So prior to actually hitting the buy button, they want more educational resources. And I think it's something that we're going to see more and more embedded into the platforms. And I think we're seeing more. I see more and more of it in the crypto trading platforms and folks like Trading212. But I've also seen separate, just pure investment education platforms like Zeed.io is a really good one, and they have these TikTok style reels that explain to you on a one-on-one, what's going on with Apple, why the latest investor results are interesting and important, what you should do next, what you should wait for. So I think that kind of almost intermediary education platform is really important. And then probably the next thing to touch on, which Kalyan hasn't mentioned, is the topic that's pretty much in every single webinar, conversation, panel, white paper, is AI. So AI powered assistance. And then another interesting stat, this one is from Wealthfront, is that 45% of millennials and Gen Z investors trust AI driven investment recommendations more than human advisors. I don't know what the heart of that is. I think part of it is maybe bias, commission bias, if you're speaking to direct wealth advisors versus AI-driven investment recommendations. But I think this year and the following year, we'll see more AI-powered bespoke investment. I'm not going to say advisors because we can't really say advisors, but investment guidance folks.
Great. I like you said you didn't have much to add, and then you had loads. That was great.
It's always a way.
I like that you mentioned Zeed because you recommended that one to me, and there's our first TikTok mention because it's basically a TikTok for trading and investing content, which is great. But I think you and Kalyan both touched on something, which is about how a lot of these innovations, like commission-free, are kind of the baseline now, and I think that really brings us closer to our topic today, which is how the innovators and disruptors like Trading 212 have to kind of think of what's next. What's the next incremental service, whether that's cash or stocks and shares, ISAs, or whether that is cards and payments. And so we've seen platforms like Trading 212 or Trade Republic, another Marqeta customer, get into cards and payments. But you also see some of the neobanks like Revolut get into investing. You see the crypto platforms like Coinbase get into cards as well. So I think maybe on that note, let's go to Mattia to talk about how you see some of these spaces, whether it's neobanks or trading platforms or crypto, kind of converging in a way when it comes to adding those incremental offerings and services.
Thank you, Josh. It's an interesting space and it's an interesting moment because I feel everyone is trying to service the consumer coming from a different point of view, from a different angle. If you think about like a Revolut, when they started, I was managing Revolut back in the days from a scheme perspective, and like kind of the investment in crypto was making them profit, like was one of the key revenue driver. And they were one of the few ones that started of saying, and now they even got to the point of even thinking about spin it off. And then there are the more established players that are trying to innovate, and there are the players like Trading 212 or Trade Republic. So I feel that like everyone is trying to target not the same audience, but like who is bringing the best UX and the more holistic approach is going to be the one that succeeds. And at the end of the day, the clients are not going to come to your platform because you have a payment card. They're going to come to your platform because holistically the type of product and solution that you're going to be able to provide. And as they mentioned in UX, AI, education. And so I think it's a very interesting, we can call it battle of like, who is going to be able to service better this new generation of investors that have the possibility and accessibility to this space, and also be maybe change a bit some of the older investors, the one that are the more established, to attract those to their own platform. And I think we are seeing an interesting moment. So time will tell. I know I didn't give you an answer, but it's whoever tell you and knows the answer is gonna lie a bit.
So I guess let's bring Kalyan back in, because what I'm really interested to understand, what were the drivers then for you guys when you started to think about getting into payments and specifically cards? There's a lot of potential benefits to offering a card program, whether it's user engagement or stickiness or efficiency or customer demand. So maybe talk us through how that discussion and decision came about.
Yeah, absolutely. I can't agree more with Mattia. It's all about user experience. It's all about product these days, and we have been very focused on this, and delivers great results for us. I think I'll start with why. Payments, cards, investments. I think it's the super app aspirations. It's the one-stop shop. Currently, the main driver for consumers is this demand for a single and I'll call it frictionless ecosystem that can cover as many financial needs as our consumers may have. This means savings, this means investments, payments, crypto, and this is all combined with the best user experience possible, combined with one product that can deliver this in a very effortless way. And as just mentioned, it's also the educational piece, because these days retail investors, they understand that, okay, before I make a decision, I need to read about, I need to learn something about this investment. I want to save, I want to create wealth, I want to do this educated, data-driven decision. So blending payments and trading wasn't like hard decision for us to focus on. Of course, if we speak specifically for the cards, for me, of course, I love this topic, but for me, this is quite important. Investments means that also delivering the payment product means that our consumers need instant access to their money and improved user experience. So having the card, of course, means that, okay, I can invest anytime, 24/5. This is the norm also these days, like having access to the markets before the market opens, after the market closes. And also at the same time, I have the convenience of having access to my working capital, buying something at the local grocery shop. And if I want, then after the purchase, I go and invest something. Of course, this means that the card will give you the possibility to offer additional services like budgeting, like investment tips based on your saving and creating these habits of savings, And of course, at some point, we also think that we can deliver a product that might be better than the others, and it's related to the card. So, of course, as you mentioned, Revolut, they started with the card, but they go into trading. We started with trading, but we want to go into the cards and payments. So the baseline is one-stop shop. This is how I can call it as a bottom line.
That's great. Yeah, Jazz, any thoughts from you on kind of what you're seeing as the key drivers for some of these platforms to get into cards?
I'll add one that maybe Kalyan can't, or it fairly is low down the stack, but revenue. Like I think it's one of the drivers. I wouldn't say it's the main driver, because there are costs to standing up a card program, but I think revenue is one of them. I think Mattia talked about Revolut and crypto driving their growth. Well, there were a couple of years where it was interest rates that drove their growth. I think last year or the year before, the interest rate spike was the main part of the growth of their platform. And so I think you can never predict over the medium and long term what is going to be the driver. So actually, it's better to start looking at things like cards. And I think again, Kalyan nailed it. I had this point in my head, but PFM. Once you've got actual access to investment and you have direct real-time access to payments and therefore consumer behavior on an individual and then group level, you could start to also pull the data out and go, okay, here's where most of our consumers who have conservative investments shop. Here's what they do. Here's how they spend, and then you can start looking at things like we might talk about it later, but things like spending linked investing. So the another TikTok reference for you, a video I've seen do the rounds again and again and again is, if you'd spent £1,000 on Apple shares instead of buying an iPhone 6 years ago, you'd be 10 times better off. So what I say is, well, you can do a bit of both. If you spend £700 on a new iPhone and put 20% of that into Apple shares at the same time, you're almost kind of doing you're not a trader and you're not directly hedging, but it's kind of a bit of a hedge on how much you've spent, and you're kind of capping the spend and also increasing potential upside. So I think there's lots more you could do. And again, from a product perspective, adding a payment card, you get data, you can also just do a lot more with your product. You can expand your product more broadly. And then, back to revenue, talking about FX fees and actually card spend. People who are investing globally are probably likely to be traveling globally and spending globally. And then again, the point that Kalia mentioned is access. Talked about access from a fractional investing point of view, but from we've seen bank systems go down recently. If you're trying to spend money that you've got an investment account and you have to transfer it to a Barclays account, and then you still don't have access to it, it might be 3 days before you can access the funds that you rightly own. And sometimes banks will also block those payments temporarily because there might be suspicion of fraud. Whereas if you've KYC'd and been verified and fraud checks are all in this closed loop, you could spend directly. There's no, there's only on a transaction basis that fraud could be flagged. So there's lots of reasons, to be honest. I think there's way more than we've just discussed, but I think those are the key ones.
That's great. And I think we've talked a lot now about some of the benefits of getting into payments and cards specifically, but I'd say if we have some representatives from investing platforms on here today, whether you're in product or procurement or finance, you're probably having to prioritize where you want to spend and where you want to invest and innovate. And there's a lot of opportunities. So I guess to Mattia, I think it'd be great to have someone from one of the schemes really lean in on this, on why cards, why is that a good kind of first step, especially if you're looking to innovate and get into the world of payments rather than, I don't know, going to banking or whatever. What's the benefit of going to cards?
I think you mentioned that. I think is where is the company in the thinking process? What's the focus? Because if your focus is like, I need to cut cost or optimize operation or streamline some of the way I do things, then you're going to focus on other things. But if the word that you have in mind is around growth, acquisition, drive new revenue streams, then I feel that like the card is and we have the data that proves it, that the card is a very powerful tool to engage with your users. It's just mentioned, like today, when clients disinvest and take the money and send them to the bank account, you don't know what the client is doing with that money. You don't understand. You don't learn what your client wants. So that's, I would say, step number one. You can start to build more tailored things. 2, you keep money for longer, which is the key value driver for this type of companies, asset under management. How do we go? So it might be counterintuitive, the fact that like you give them a way to spend them, and which means the monies are gonna go away faster. Actually, it turns out that like if I know it doesn't take me 3-5 days to access my money when I stop investing. Actually, they're available instantly. I'm gonna most likely put more money into the platform. And then, of course, there is the revenue component. I just said there is all the FX revenue stream conversion. And then it's an incredible marketing tool. It's so easy also from a regulatory perspective to market a card rather than market, like, for example, a complicated stock as product or like crypto. It's so much easier and it's so much more easier for the client to understand the benefit of a card rather than get directly into CFDs for the average users. So I would say this, I think it's some of the data point that we were able to see. And if you think about it, the card has been a very powerful tool that like across multiple industries, because you have co-brand that goes from the petrol to the grocery to the whatever industry you can think about. The card has proven to be a very incredible tool to make people more loyal and more sticky. And what we are seeing here is what maybe the crypto world has experienced 5 years ago, and now basically there are no crypto trading platform without a card. I feel that now with Trading 212, Robinhood, Trade Republic, like the big guys have moved. So if we sit here in the same room in 3 years, I would be like, well, no more trading platform or brokers are out there without a card, because it became kind of an hygiene factor, and like everyone needs to have it to even be competitive.
That makes sense. That's interesting. And maybe sticking with you, Matthew, for one more, I'd love to come to you to talk about, so like, let's say you make that decision, you want to launch that card program, like you said, you have to do it to stay competitive. Cards, though there may be some overlap, are definitely a different business model to running an investing or trading platform. There's different concerns. There's different regulatory environment to consider. So when you are speaking to a crypto or a trading platform at Visa, what are the types of advice you give on the decision of whether to try to build some of the functionality in-house, whether it's processing or managing the program, or versus looking to partner, because it is a bit of a new space, and experts like Marketa can help you, really navigate the complexities of the scheme and processing, etc.
Yeah, look, I give all the same example. I used to manage Revolut when they started, and they started via partners. So if even them, that like, it's a business of scale. It's a business of scale, and it's something that requires expertise, and like, especially at the beginning, when you as a company, you don't know you're going to be that successful to justify all those level of investments. It's such a big risk to bring some of those things in-house, that the best thing is leverage company that have been doing this for years and can help you steer your decision in the right direction on. I'm sure that Just has helped so many companies on like where to look, because like you can make a car program profitable, but you need to know how to do it. And also in structuring, I would say always think about what are the geographies. The key question that I always ask is like, what are the geographies? Like, where do you need to go? Where are your clients? What type of solution and product do you need to make your product successful? What type of features do you need? And then is how hard, how much time do you want to spend and invest? Because there are like there is the one-stop shop. There are companies that like you go, you knock at the door, and they do everything for you end to end. Or if you're able to have a certain level of expertise and you want to dive a bit more deeper, you can also pick up the providers that you want. So I think these for me are the three type of like advice and thoughts that I always give. And the last is, as just said, like, is not that like you turn it on and you start to make millions and off you go. It's a business that you need to invest and it's gonna take time, but if you do it in the right way, you definitely see reward. And I'm sure that Kalyan will tell us a bit some of the key benefits that is bringing to the platform.
Yeah, that's a good segue. So Kalyan, when you guys decided to go ahead and launch a card program, like what was your thought process behind partner or do it yourself, and what were some of the considerations when you started to think of, okay, we need to find a partner? What were some of the criteria you were looking at?
Yeah, sure. Well, it's a very, very simple answer, to be honest. Card issuing is a niche and very complex thing, so you need the right partner. You can't do it on your own, as Mattia mentioned. You need to do it right. So it's not just about issuing a card. It's not just, okay, I just want to give some card to my consumer. You need to think about, okay, I need the right partner. I need the right countries. I need the right processing and features that this partner will deliver to me, because let's be honest, this is a very, very complex thing to process technically a transaction. If we start, let's say we decide, okay, we want to do it on our own, probably for the next 3-4 years, we won't have the card. And it's not a sure thing that after 3-4 years we will have it. It was all about to select the right partner. And when you want to scale, when you want to deliver the right program, you need all the technical capabilities of this partner. It's the right Apple Pay provisioning, it's the right tokenization, because there is a card and a card, and like this, there is how you provision your card to Apple Pay, and the right way and the wrong way. Because the consumers these days, if you're not successful from the first time, right? If you can't provision, they say, okay, there is another, app. There is another program. I'll just try it there, because they don't like declines. They don't like, technical issues. They care about the product and how this is delivered for them. The worst thing ever is you go with your card, you try to spend something, right, and you get a decline. This feeling is not the greatest one, especially obviously if you have money. So in terms of partner selection for a company like Trading 212, where we are API focused and driven, where the product means a lot, the right partner is the partner with the best product, with the best APIs, with all the technical capabilities that are there. Of course, modern partner for us, this is quite important. I think just mentioned Barclays, for example. The legacy systems out there are not right fit for a company like Trading 212, and the other companies that we have mentioned. This is how we are different, is because we offer something more modern, something based on new technology and new APIs. So yeah, card issuing looks simple, but it's a very niche thing. In order to deliver it right, you need the right partner. This is crucial, no matter how good the intentions are.
Yeah, I like that you touched on that. We sometimes talk about the confessions of card innovators, because I think people sometimes think it's simple and then they make those costly mistakes. So getting it right up front is really important when you're thinking about launching a card program. So Jazz, do you have any thoughts on the kind of partner versus in-house, as well as if you've seen any mistakes people have made by making the wrong decision early on when looking for partners?
Mistakes, yeah. I mean, not going back to Mattia's point at the very beginning, like when and why to launch a card program is also important to picking the right partner. When and why is, okay, how many customers do we have? What's our roadmap look like? What are we doing in the next 2-3 years? What does the environment look like? What does the investment environment look like? All of that stuff. And also, like, have you got the funds to launch a card program internally? And usually the answer to those questions are so uncertain that it makes more sense to partner regardless. Even if you are planning to build internally 2 years, 3 years down the line, it makes more sense to partner regardless. And again, going back to Kalyan's point, I think mistakes people make is not mapping out what they want from a provider and not understanding what they're trying to build and making that clear to the provider themselves. It's usually, in my experience, it's not the challenge or friction on the provider side. It's the challenge and friction from the fintech side or the digital partner side, and they're not really sure. We want prepaid or credit or debit. We don't care. It's like, well, no, they're very different products. So you have to be like, why are you launching the card program leads you to what kind of card you have initially, what you scale up to. Like Visa Infinite versus Visa Prepaid is a very different proposition, very different cost basis. So really the mistakes I've seen are people not really understanding why. That goes back to Mattia's point. And then the understanding of why really informs who you pick as a partner. But also the mistake is actually not putting a proper partner selection questionnaire together. Here's why we're launching a card program, which means we need a card provider or issuer processor that does this, API first, has support team on call 24/7, and actually listing those points out. I think that's the biggest mistake I'm seeing.
Yeah, that makes sense. Mattia, when you think about some of the challenges that you've seen of maybe companies who've gotten into cards but haven't thought through some of the basics that they need, do you have any examples that come to mind, and then how maybe they've found ways to overcome some of those challenges?
I would say is an example is, and I'm not trying to sell Visa here, but like not all programs are successful day one, and you need to test and learn. If you want to succeed, you need to understand what are the drivers that are going to make your card program successful. You need to understand why the clients decided to have a card with you, because at the end of the day, what brought you to the platform is not the card, is the value proposition, is the product and the solution. And I think that where I've seen people failing is, yes, I want the card, but I want it on a separate onboarding, on a separate app, on a separate everything. And you're like the client, you're not making it easy. You want the UX, you want everything embedded, you want everything. So I saw like a similar type of, let's say, platform with like someone with maybe a 30-40% penetration on the card on the client base, and some other with like less than 5%. And you're asking why? It's the same. It's a card, but one is embedded. It drives loyalty. It drives like roundups. It's the card is embedded as part of the segmentation that you do within the platform. Like, again, we go back to Revolut. They've been very successful, but the Revolut is not giving you the metal card. It's giving you the metal subscription. And then inside that, there are a lot of things. And by the way, the metal card is a nice thing within those type of things. So I think it's like think this through in this ways, like how do you, the card is an incredible accelerator for your loyalty accumulation and value, but like how do you embed it into your solution? Because if you do it and you park it on the side, it's not going to drive value on its own.
Yeah, that makes sense. I think we've touched on some of the challenges and things that can go wrong. I'd love to turn to the positive side. So Colin, you guys launched, I think, your card program some point last year, maybe beginning of last year. So in the past year of having the program live and onboarding customers, what have been some of the surprising successes and how it's helped differentiate you in the market and grow your customer base?
Yeah, we launched like almost 1 year ago with the help of Marketa. For us, the card, as just mentioned, we had a pretty clear understanding of what we want to achieve and what will be our strategy with the card, what should be the exact product. And once you have this clear understanding, once you select the right partner, then the card program is a great tool to make this difference between you and the competition. For example, we have introduced absolutely zero fees when it comes to FX and the cost. We are, I'm not quite sure because I don't have the data, but I'm pretty sure we are one of the cheapest cards when it comes to FX because we use the true interbank rates. We don't add any FX. So obviously great marketing tool. And this is something very different because there is zero subscription to our card, zero cost at all. And you have the FX 24/7 over the weekend. So this is, I think, a very, very clear example of how you can use the card as acquisition tool. As Mattia mentioned, a very powerful marketing tool. And it's a little bit easier to market a card than a specific training program. And this obviously differentiates us from the competition because this is something that the other companies are not giving up because FX is quite a good revenue line. We have been discussing about revenue, but okay, we have the card. We have now the flexibility to offer the best FX rates on the market. And I think this is a great story of success when you know what you want to achieve with the card, when you have the right partner, when you have the right understanding of how this card is complementing your product, because this is the essence of Trading 212 to help people create well, commission free at all, zero cost at all, and we progress this with the card.
Yeah, that's great. I like how you guys are balancing the card as a growth lever, but also it's a value add for your existing customers, and so trying to balance the growing the revenue, growing the customers. I guess, Jazz, what are your thoughts on how, I think some of the investing platforms out there might be thinking of cards just as that, as we talked about, like incremental feature, but actually how it could help be a growth lever, and maybe people actually end up coming for the card and then get into investing.
Yeah, and again, I think Mattia and Kalyan touched on the bigger point for me, which is the traditional investing journey was you put money into an account, you start with zero, you do KYC, you start with zero, you put money into the account from probably a bank, nowadays Challenger or Neo Fintech, then you invest in whatever you invest in, and you might kind of sweep some profits, but you take that out of that ecosystem, then you put it back into a bank, and then you usually spend. You might spend, like you might do a bank transfer because it's for a house or for a deposit on a car, but for the most part, when you, or with these generations, millennials, of which I am, and Gen Z, they're not taking huge amounts out. They're really using it for like weekly and monthly spend. So it's not a case of, it's got a big chunk of money that goes out. And I think the important thing is to reduce the number of steps in that process, is to increase the likelihood of the money staying in and that actually going to the right place, and also keeping customers' attention into the product so that they can use the value add features like education, and not even just education on specific stocks, but things like strategies, investment strategies. It's not necessarily the case that you take some money, invest it in Apple every time. It's maybe, there's a $1 strategy that Trading 212 introduced. You round up some change, and every day you round it up, and it just puts it into a stocks and shares ISA automatically. You say I'm a conservative investor, and it just sweeps it directly into an ISA. I think that kind of stuff is important for other investment platforms to think about. It's not just revenue, again, is a big one, but it's not just the revenue. It's you're keeping customers in the ecosystem. And again, to Kalyan's point, and I think he's spot on, I think we're heading to this point where we've had so much choice and it's been so decoupled. Everything's been, here's an app where you could see your spend. Here's an app where you can invest. Here's an app where you could see your transactions on a bank. Here's a FX app. Here's this app for this. And I think we've had so much choice. I think that choice is kind of converging now. We're getting to a point where the big, the trading 212s, the Monzos, the Revoluts are going to start, and again, to Mattia's point, are going to start cross kind of pollinating all of these other things in. And really it'll be marginal, whoever has the marginally better UX or whatever the customer's mindset is. If they have more of an investment mindset, they might say, I'm happy to have this view. I'm kind of a daily, weekly investor. I'd rather use a Trading 212 app as a spending and investing platform. So I think it's important to think about your customers, but it's also important to think about where we're all heading. And really we're heading to a point where customers don't want completely decoupled, disparate products. They want more of this plus this plus this. They might not want a super app. It remains to be seen, but converging towards the super app model, I think is where we're going, even though the West has kind of resisted for a while. It's where we're going, I think.
Yeah, and I guess it kind of makes sense, especially with a platform like Trading 212, where you lean into the education. So if your customers already trust you with their investments and you've earned their trust by helping with the education, well, they might then trust you as well with their everyday payments. So it makes sense. And we talked a bit about the growth, but one thing that I love about cards, especially for digital platforms, whether you're a neobank or a neobroker or whatever, is your customers primarily have interacted with you online. They're not walking into a branch and having some physical interaction. So there's a part of the card bringing your brand to life in a bit of a new way and allowing customers to really engage with you. So maybe they were always a Trading 212 fan, but now they can go out and about and kind of be like, okay, I'm Trading 212 super fan. Everyone can see it. I'm using the card.
It goes back to Mattia and Kalyan's point again. A card is a great marketing tool. You're probably not going to open your app and show off all your investments to everyone, because sometimes there's a bit of shame, and sometimes you don't want to be too boastful. But a card is an easy kind of way to show off that I'm a Trading 212 customer. That's how early days of Monzo kind of snowballed. It's okay, this is hot crawl card. What is that? And you're just kind of curious. You inquire, see the name, you Google it. So I think it's also, on top of that, Josh, brilliant marketing tool.
Totally. And you mentioned it, Kalyan, like it is a bit easier sometimes to advertise and market a card than the platform. So yeah, Matthew, what have you seen in terms of how cards can bring the brand to life, and also ways that people are using cards to stand out from the competition?
We can use an example of like Trade Republic, that it's public knowledge, like they issued like more than 1 million cards in 6 months. So they saw an incredible growth, and their premium card is like a mirror. And so there were people using their mirror picture on Tinder with their card, and it did a lot of like hype and stuff. And that's like a pretty, simple way to see how the marketing, how the card has drove so much attention and interest to a trading player. That's one example. I would say there are probably plenties of like also beyond the pure trading capabilities, because as I mentioned before, the card has been used as a loyalty and acquisition tool across multiple verticals. And I'm sorry to repeat myself, but I think it's really how you link the card to the core business. What are the benefits that they're going to add to for your client to accelerate your core business, which is like, I don't know, investment roundups, discount when you buy, or things like that. So those are I would say the key lesson learned that I feel it's, or the Robinhood, all the big marketing campaign with the gold card. And then I think is also have fun. like I was talking with one of the CEO of another investment company, like when we started sparkling some ideas, like maybe I could put like have fun. Like if you as part of the company, you start to be engaged and you see, I would love to have a card with like something on it that resonates, then it's is most likely to succeed because you are one of your own customers.
Yeah, I love that. I think it really suits investment and trading platforms to bring the innovative and fun to the cards, I think more than almost anyone else, kind of because of how you're approaching financial services overall. I'd love to talk a bit about geographies, because I think maybe Mattia, you mentioned it earlier, and you need to think about that when you're thinking of card programs. And I know, Kalyan, we had the press release Trading 212 are growing across Europe. Obviously, we've talked a bit about Robinhood, and they're trying to come here. So maybe let's talk about, within the context of cards, but also the broader business, how, Colin, you're thinking about expanding Trading 212 across Europe and beyond.
Yeah. So as you mentioned, we have started with the UK, then we expanded to Europe. And of course, we have plans to expand, for example, to Australia. We have the license there. It's a very important market to us. When it comes to expanding, when it comes to growth, when it comes to offer the product at scale, the most important thing is to have the right partner to support this. Obviously, when it comes to card issuing, when it comes to these integrations, they're time consuming, they're heavy. It's not just a simple thing to consume one API. There is compliance. There is, of course, working with the schemes. There are multiple things that you need to consider, and you don't want to have like multiple card issuer process from a number of perspectives, but it comes to cost, it comes to operational efficiency and things like so. This is quite important. Just mentioned, if you want to have a successful program, you need to map your requirements out. You need to go with the right questions to the partner. And one of the most important things is, okay, I want to start with UK. I want to start with Germany. Do I plan to expand this program more? Do I plan to offer it, let's say, in Brazil, I don't know, Southeast Asia, or wherever? And this is things that you need to sit and map it out from the beginning. You need to work with your partner. And of course, the most important part of thing is your partner to have this, I won't say a global reach, because it's kind of tricky, but of course as global as possible. So you can easily grow, you can easily expand, you can easily offer and replicate your services when it comes to card issuing. Because once you set it up, once you select the program, its changes are not that easy. Sometimes they're expensive, also require effort, require operational power. So you need to sit in the beginning, you need to create your strategy, you need to present the strategy to your partner, select the right partner. And if this is all done, it's relatively easier to go and expand.
Great. And I'll stick with you. You don't have to answer this, but you guys are spread from the UK to Europe to Australia. Marqeta's headquartered in the US and California. Is the US expansion on the roadmap, or is that something you guys are focused on Australia for now, and we'll see?
Yeah, we don't have plans for the US. Our platform is not available currently in the US, so I don't know. To be honest, it's Australia now on the radar. It's Australia on the map. We'll see in the future. Of course, we have the right partner for US especially, so I'm not really concerned if we want to expand to the States.
Great, love that. Yes, Jazz, what have you seen from a kind of seeing, whether it's trading platforms or digital banks, the kind of local market expansion and how some of those are starting to overlap, whether it's like likes of Monzo in the US or across the UK and Europe, Robinhood, etc.?
Yeah, I mean, I think it seems to be easier to expand out from the UK to somewhere else than in from places like the US. I mean, we've seen a couple of examples of US investment platforms trying to launch in the UK and not doing it right. With Robinhood, we've seen one. I think they're coming up to their 1 year now in March. So Robinhood, we've seen them, they've come in and they've launched and they've been around for a year. But I think it's important to ensure you prove yourself in your local market first. I think there's lots of, this is probably a fintech challenge more broadly is that some fintechs already have international expansion on their roadmap when they haven't even built a product or launched their card program. So as long as you understand your fundamentals, you understand what your product is good at, who your customer base is, there are opportunities to look at your customer personas, who the kind of highest value customers on your platform are, the biggest users, the with the largest portfolios and the biggest spenders, and look at those personas and then try and map them across potential next regions. So I think, I've done some work in the Middle East recently. I'd say there's lots of value, especially from the way that Trading 212 do it, in investment linked education with a direct link to the investment itself. So education and then having it mapped directly to a trade. And I think if you look at the personas, the kind of target market Trading 212 looks at, I think that maps quite well. I think when you're looking at international expansion, I think it's important to really understand what are your fundamentals, what are you good at, who's your main customer base, who's the core, what are their personas, where do they shop, what are they, what kind of work do they do, and ensure that maps correctly to wherever you're expanding to. But again, back to Kalyan's point, picking a partner that has global reach is great because it gives you the option, but not the obligation. So you could still look at all of that stuff and go, oh, we're just not interested right now. But at least in 2 years, you still have the option to expand with the challenge of, okay, we have to integrate a new issuer processor now off the table because you've already got the right partner that has that reach. So it gives you optionality and it gives you choice, and that's kind of what you want when you're growing fintech.
Yeah, I think it makes sense, and I think you definitely hit the nail on the head because there's specific nuances to each market. So like Trading 212, you guys have done such a great job building in the UK. So if you've been on the tube in the past 2 years, probably familiar with the brand. Also, you guys have the compelling ISA product. So those of you outside of the UK, that's individual savings account. But to a UK consumer, that's kind of a no-brainer must-have. But for a platform coming from the US, maybe that's not on your roadmap because maybe the UK market just isn't something you're as familiar with. And I think that goes across all regions. Yeah, Mattia, on the geographic and global expansion question, obviously Visa is anywhere you want to be, everywhere you want to be. And you've mentioned Revolut, who are also pretty much everywhere. So where have you seen some of these platforms succeed when trying to grow geography?
I think it's like I just mentioned it. Like if we look specifically at cards, I can think a lot more example of companies that starts in Europe and go somewhere else rather than somewhere else into Europe. And one of the key reasons I think is also, let's say, around the economics, because like the interchange is so much higher in everywhere else that like if you are a USA company, you're not gonna probably put Europe as top of your list for that aspect. So meanwhile, if you're a European company and you make it work, then when you go in the US, you're like, okay, the economics are a bit richer. So I think from a card perspective, this has been like a bit of the trend. And then there is the layer of regulation, which unfortunately there is not like from a processing perspective. Yes, you take a Marqeta, you guys like can cover technically most of the countries and regions, but like then these players needs to find like a local partner for Europe, a local partner for the US, a local partner so there are some ways to try, test and learn, and maybe you saw something around Revolut and in Ukraine. Like there are ways to like set up the programs to test, but like at some point you need to find a local provider and a local regulator. So I would say it's also a lot around like is focus. Like you cannot scale the world. Like you're not a self-custodial wallet, you're just like a technical code, and like you can scale, you can get client everywhere just because the trick is highly regulated. So and you don't want to try to set up too many partners at the same time. So I think these are like some of the key trends that we've been seeing.
Yeah, that's great. So we've got a few minutes left. So maybe 1 or 2 minutes each. We don't need to get into full scale predictions, but I'd love to see, like looking ahead, where do you see the next innovation for trading platforms in, especially with financial products? Is it banking? Is it, checking accounts? Is it saving, lending? What's on the roadmap? So let's start with you, Kalyan, and we can go around.
Yeah. So we start with the frictional shares, and I would say that for me, Go micro investments are something that might be a very, very niche thing and very, very important. Removing the cross borders, removing the need to have this kind of different stock exchanges, so you can access different assets. Also, I think tokenization of these assets will give, and again, we touch the concept of fractional investments, is likely to expand into art, or let's say different assets that will go into these fractional shares. And I believe lending as well. I'm a big believer in lending, and this complements the card quite heavily. So I think people, not having the need to liquidate investments, but use them as collateral and then potentially spend with a card. I'm a strong believer that this can be a game changer, especially for retail investors that are sensitive when it comes to working capital and their liquidity.
Love it. That's great. Jazz, what about you? What are you seeing looking ahead?
I've got my kind of asset management hat on from back in the day, and so I think there's going to be a point in the next couple of years where trading platform can be like an engineered portfolio where you set some rules up and you essentially say, look, I'm a semi-conservative investor, or I'm an ambitious investor, or I'm a very lean into risk investor, and then you set some rules up, and then it just auto invests as you spend. You set some roundups, and you don't really actively think about your investment every single day, and it's more of a weekly, monthly check-in. And even those check-ins can become automated to a certain degree. Push updates to you and say these rules aren't really working for you based on our long-term projections. So I think a lot more AI, a lot more rules-based investing, and this concept of you have a portfolio and the product trading 2-on-2 along with your spending habits just creates an engineered portfolio for you, and then tweaks it every single day. It will move. It's called asset allocation. Every single day it will say, look, I'm going to move some stocks out. I'm going to replace them with bonds. Here's where we think the market's going. Or this stock isn't performing as well as that tech stock, so we'll switch them out at the same cost because we see the upside's a bit higher. So I see that really, because I think people don't really want to be acting as traders when they have day jobs. They want to just go, look, here's my investment. Here's some money I want to set aside and see grow. I just want to see it grow. I'm not necessarily specifically tied to Apple or any other stock. So I think that's where we're heading. That's my prediction.
Nice, that's great. And then to wrap us up, Matteo, where are you looking at next?
I think if we stay in the topic of like payments and cards and investment, like I feel like the ship has sailed when it comes to broker and cards. I'm expecting to see more and more players following the success of Trading 2-on-2, Trade Republic, Robinhood. And I like the idea of Kalyan, like I think an innovation there could, when you start to mix it with the like lending, like for example, instead of me having to disinvest my assets, give me like a kind of a loan that I can spend against it, which is a concept that we've seen a bit in the crypto space. But I feel that could be an interesting innovation. And then for me, it's kind of a natural evolution where we would like to see explore more is the asset manager. The pension funds, the asset manager, how do we link maybe payments and day-to-day activities into those spaces?
Amazing. Great. Well, we are at time. That flew by. It was a great conversation. So thanks to our expert panel. Really good conversation. Thanks to everyone who joined us in our LinkedIn Live audience. I know a lot of people weren't able to join us live because of the reschedule. So the recording will be live on marqeta.com on our video hub. It'll be live on LinkedIn. We'll send it out over email. and we'll do a blog write-up. So yeah, thanks everyone, and appreciate the time.
Thank you.
Amazing. Thanks, Josh. Thanks, everyone.
Take care, man.